Hey guys, welcome to the Forex Market Research video. In today's video I will continue my yesterday's back test on Euro Yen 1 hour. Okay, and the strategy that I'm going to use is the Unified Gartley with trading active trade management. Okay, so if you're new to Unified Gartleys, if you don't know what is the Unified Gartley, it is actually a combination of BAT and the Gartley. So whenever you see a BAT, it is a Unified Gartley. Whenever you see a Gartley, it is a Unified Gartley as well. Okay, simply don't do the difference between the two patterns. For a detailed identification rules of that Unified Gartley, you can see the ratios. So the minimum B point is 0.4041 of X to A, and the maximal B point is 0.736 of X to A. So if price hits the range somewhere between these two of X to A, then it is okay. The minimum C, maximal C is 3.221, it's pretty standard. The completion is 786 always, regardless of the B point. And the invalidation or stop loss level is 105. 5% above X is enough. Above or below X, it depends on the direction of the pattern. Okay, I already did some back test with these patterns, so let me demonstrate to you. I'll expand that Excel spreadsheet. So if we talk about euro dollar, I want you to pay attention to this expectancy and the profit factor. So the profit factor shows you how much your winners outweigh your losses. So it is 1.21. So every dollar that you spend as a stop loss, you have $1.21 back. Okay, and the expectancy tells us that you have 0.10. It actually is 10% of your risk you generate on each and every trade. 10% of your risk. So if you risk 1%, you are sure to generate 10% of that 1% back, 1 decimal of that. Okay, pay attention to these numbers. And the second target, of course, it is greater because you are letting your winners run, and it is 22 and 1.36. Dollar yen 12.20, 1.24, 1.32. Pound dollar 10.21, 1.21, 1.35. You see how stable is the edge. Unlike my other strategies, unlike my other back testings that vary greatly, this strategy is very stable for many pairs that I see that I did the back test. For 3 of them, it is the numbers almost coincide. So I'm doing the euro yen right now, and I'm pretty confident that the results will be the same. Okay, so as for trade management, the trading plan looks this way. First, you need to identify the pattern, and you need to use some kind of algorithm. So the algorithm is pipsage, and it says that the reversals that are less than 58.9 pips, 58.9 pips, are ignored, and the swing only starts when you have a reversal more than that. Lucky we are to have MPS 5 where you can simply switch the algorithms, and of course in the settings of the MPS 5 you can set the value of that algorithm. Every algorithm that is available in MPS 5, and we have 10 of them, 10 algorithms, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 automatic and 1 manual algorithm. Every of these algorithms can be specified according to your taste, every of them. And when you switch between them, of course, they execute your settings. So the settings for this is 58.9 pips. Okay. What else should be explained? I think that's it. This is the trade plan. The entries limit order of at the completion of 786. The initial stop loss is 105 x to a, and then it is reduced when half of risk distance reached. You will see the details how it happened when I show you the trading setups. Then it is broke even and close half of your position when one-to-one distance is reached, and then it actually the half of position is left to hit target 2. So what it means to have half position? It means that you either open one position that with a double lot, or you simply open two positions. That's it. When I say double lot, I mean that the position should be what is that, even or whatever. It should be split by 2 without any mod or whatever. I know the word for programming function that has it, but I don't know the English word for that. Okay, so it should be divided by 2. Okay, then let's do the research. So the last trade I found was this, 2000, 7 o'clock, and it was this one. We just continue. Very convenient to type your times, and you can start from the place where you stopped. Okay, this one didn't complete. Okay, this one did complete, and look at the price section here. I will zoom it in. So the trade initially had this bounce to the upside. So if the area, let me draw some rectangle. How can I draw a rectangle? I need to customize that, and I need to choose rectangles and insert them to my toolbars. Now I have a rectangle. So if the distance from here to here, the one that I mark, from the reversal place where the reversal started to the completion is less than 5%, is less or equal to 5% from A to D, then the pattern is considered completed, because 95% of the A to D movement is completed, and it already hit targets, and you should not enter at the second touch or whatever. So I created the Fibonacci level that is 0.05%. So here it is, and you see this is the area of 5%, and it's not that. The entry is outside of that area of 5%, so it didn't hit the 5% range. Okay, so it means that the movement to the upside should not be considered as the movement of a completed pattern. So what we do, we actually enter at this big black candle. Okay, copy my time, paste it here. After that, look at the price section. So price goes lower, then it goes lower, then it reverses, goes higher, and it doesn't hit half. If it does not hit half, the stop loss remains the same, and then it reverses and goes to stop loss. This is full stop loss. Full stop loss distance is this, half stop loss is this, twice stop loss is this. Okay, so I type the initial risk as 343, and this result that I had in this trade is minus 343, and result for the second trade is minus 343. That's it. Here's the trade and how actually I type them into my Excel spreadsheets. The second opportunity is this bearish Gartley, and let us see what happened. So it completed on this white candle, and then it goes higher and higher and higher, almost hits stop loss, but it didn't hit stop loss. Then it goes lower and lower and lower. On the next candle it first continues lower, and if you see, it hits half of take profit, half of risk distance, and then it reverses back and goes higher. So in this situation, because we first hit the half take profit, we should move the stop loss to to reduce the risk by half. So this way we didn't have any full stop loss, we only had half stop loss. It was cut. So the initial risk is 419 and 21 was the actual stop loss. 21 is half. I remind you, this is the initial, this is half, this is twice. Okay, the second opportunity looks this way. Very simple. Yes. We first go here, complete the pattern on this candle. You can see the price coincides, and then we go to hit the first target, almost hit the second target, then we reverse and go to the entry back. So what I am to type looks this way. I type my time, then I type my first target, 336 is initial risk, then I type my first target is 336 back, and here I should type 0, but we had a gap through my 0 stop loss. Okay, this gap is very insignificant. The price opened here and it opened, I'd say, minus 0.3 pips. Instead of having 0, we have minus 0.3. Oh, minus 3. Sorry. Okay, now we have it. Minus 3 decimals. What happened here with this situation? We moved higher, retraced back, we moved higher, retraced back. In both cases we didn't trigger the trade. Okay, so what happens in this situation? We'll move here, complete the pattern, trigger the entry, we go here, and the initial risk is 441. Then after that we go here, we hit the first target, then we go higher, almost hit the second target but didn't, and that's why second part is 0. Okay, nothing. This one did complete. Very simple, very sharp reversal. First target and then reverse. That's why it is very important to break even your trade, because very often it reverses. Initial risk, first winner, second is 0. Okay, here's the situation of that trade. You see, it started earlier and it went to the downside. So this trade should be skipped. %5 rule. It is within the area of 5%. Okay, another situation is this one. Complete on this candle. Then price initially goes to the downside and we do not hit half. The half is this. And then we reverse to go to the upside. So it is full stop loss. Minus 44.9. Okay, let us continue. So what we have with this setup, we completed the pattern here. Then we first go to hit half and then we reverse. When we hit half, first we move our stop loss to cut our losses. So the initial risk was 702, and as we cut the risk, it is 351, sorry, minus 351, and minus 351 for the second target, and go to the next setup. Okay, another situation is here. Here's the pattern, slightly weird. The C to D leg is not the best that I like, but in this backtest I do not filter this C to D leg when they are broken or not broken, although I don't like them in real-time trading. But in this backtest I don't do that very many filtering. What I'm interested in is the overall performance of the pattern. Okay, so although the CDD leg is kind of strange, the pattern goes and completes on this candle, this white, and then it immediately hits the first target. So what we have is 272, 272 and 0, because second target was not hit. Second target is here. Another pattern, pretty obvious winner. Okay, so 43.8, 43.8, and then we hit second target. And the second target is 87.6. Then we have this situation. It bounced to the upside, but I don't think it is 5% bounce rule. So you see this 5% is very far from completion, so it was not the 5% rule. This means after that we had 5%, but we didn't hit target. So we should enter this. The pattern was okay. It was simply a losing pattern. Sometimes they lose. Regardless of your trade management, regardless of your skills or whatever. I suppose we hit stop loss and then reversed to the downside. These situations are frustrating, and they make you, giving you a temptation to move your stop loss slightly away. Sorry, it was a loss minus 49.1, minus 49.1 as well. So let's see what we have so far. This is the diagram. Well, it looks pretty good. It is not very much different from the diagram on dollar yen. So initially on dollar yen we also had some bounce to the downside, and you see the trade number 46, which just went out of this negative zone. So we already have 50 trades, 49 trades, and we slightly above the zero. When I say slightly, it is 100 pips or so. Okay, so 93 pips and minus 4 pips for the second target. Okay, so let's continue. Let us find a bit more trades to train our eyes to grasp the situations, to install good habits. What I actually do, I'm installing the probability thinking habits. When I see the pattern repeat itself over and over again, when I see this working this way over and over again, of course I'm prepared for the drawdowns, I'm prepared for anything that may happen in the market. And when I have a trial time, I know what to expect. Initial risk was 70 pips, then we won 70 pips, and for the second target 113.99. So you can see it was touch and reverse, and the bull pattern of course was invalidated because it moved to the upside. After that we have a losing pattern. So it did complete on this candle, and it spiked to the upside and hit half distance, yes, and then it reverses back. So what it means that instead of full stop loss, we only have half stop loss. Minus 15.7, minus 15.7, done. Didn't complete. This one is obvious loser. It completed on this candle and went to the upside without stop. $327, and we have minus 327 and minus 327. Okay, this one more time we have we don't have stop loss hit. I thought we have a stop loss hit. You see the completion took place at 10.57.0 and 56.2, actually 8 decimals of pip away from the stop loss. And then we reversed and we hit target 1, it is here, and then we hit target 2, a good winner. Both targets winner. 308, then we have 308, and then we have 61.7. Okay, completed on this candle, went to the upside, then went to the downside, then spiked to the upside, going here, first target, going here, almost second target, but not, then came back to entry, and we know when we come back to entry after the first target hit, we have 0, we have break even. It is 55.2, 55.2 winner, and 0 on the second half, second portion, second trade, whatever you call it. So this is the completion. And then we go to stop loss, and it is full stop loss. Very, very simple. First one looks this way. We completed the pattern of this candle. Then we went lower, then we reversed, went higher, hit half, then hit full, reversed to entry, and hit break even. So the result is 609, 609 for the first and 0 for the second. Let's consider this example. Yes, it completed on this candle. So the time is this one, and let me show you. It goes hit half, full, then it didn't hit the second target, then it come back, but it didn't come back to the entry. That's why we don't have break even. And from the second attempt it does hit the second target, so it is both target winner. 401, 401, and we have 802. Then the next trade setup, it is very simple. Completes on this candle. Right after the target is hit, you immediately sell it slightly above that target to enter the next Gartley. And what do we have? Let me make this color something of that pale. Okay, so what do we have on this? I need to delete this. Okay, what do we have? We have price moving back, then it spikes through the first target, then it goes back to the entry. It is only one target winner. So we have 308, we have 308, and we have 0 here. That's it. This is the trade. Zoom it out. Okay, this one didn't complete, went to the upside, didn't complete. Here, this is the early completion, the one that I'm talking about. There are some situations when we have that early completion and they fall within the 5% rule. It happens. Simply missed opportunity. Okay, so what we have on this trade completed with this candle. So I need to change parameters. I copied the name instead of time. Okay, so the price action looks this way. We first go lower, didn't hit half, higher, slightly consolidate, didn't hit half, then we go higher. This time we did hit half and we exit here. Very good. Instead of full stop loss, we only had half. Minus 255, minus 255. This one is early entry. You see, this one is also early entry. And this one is not early entry. Okay, so we have this candle. $66.8 full stop loss, minus $66.8, minus $66.8. That's okay. Early completion. Okay, so this one is the pattern that I'm interested in. Didn't complete on this candle, so this one is the completion. Then we go higher, then we go lower. We do not hit half at this candle, yes. Go slightly higher, and then we go lower. And you see, we just missed the half level. And then we go higher and hit stop loss. It is full stop loss. Okay. Another trading situation is this one, and it is obviously a full stop loss. Okay, let's see the picture that we have so far. And the total picture looks this way. Pretty good, pretty good. Starting an uptrend, then we have a drawdown back. I think it will continue same way as we have it here, or here, or here. You see, sometimes we even have very large sideways movements on some pairs, but overall the strategy, I suppose it will have a positive expectancy. Okay guys, that's it for today. I hope you liked this video. If so, give me a thumbs up, share this video on social media. I will post the link to this Excel spreadsheet in description, so you can watch it using Excel online on your browser, or you can download a copy to your computer, and then you can modify and play with these numbers maybe. I think you will be able to download that. What else? I will also post the link to this awesome MPS5 pattern recognition software. Just go to my website www.ps-software.net and watch the video demonstrations to see the full potential of that software. And until then, I wish you trade your plans and plan your trades, and I wish you do the market research and you get the confidence of what you are doing, and instead of simply gambling, you treat your business, your trading as a business. See you then.